Hello and welcome to the Investing Podcast. My name is Ben Nye. I'm joined here by Matt Krebsbach. Today we're going to be talking a little bit about Amazon and its encroachment or potential encroachment into the PBM space. PBM means Pharmacy Benefit Manager, and this is the next iteration of Amazon's long saga of continuing to grow from a seller of online books to really domination of not only retail, but now also the healthcare space as well. Pharmacy benefit managers, just as a quick background, essentially manage pharmacy benefits. So what does that mean? It means they take possession of the drugs from the manufacturer, distribute it to retail customers and the like, according to insurance contracts. So they'll make an agreement with an insurance contract, and they're kind of the middleman. They don't really do much themselves. Their margins are usually very small, between 5 and 7, maybe 8% if they have a good year. But essentially they're just continuing to skim off a little bit and make sure that the distribution of the drug goes through smoothly. Now, it's a very concentrated industry. Express Scripts and CVS and Walgreens are the biggest players. And it's concentrated because these guys are essentially legalized drug dealers. And so the government only wants a few of these to exist so it can really control them.
And their customer base is really concentrated too. Like the contracts
Exactly.
they have are huge with like the health insurance companies.
Yeah, it's a great point. And so now we have Amazon trying to break into this space, and this would really be the newest entrant into the space for a very, very long time. Usually when you see a new entrant into this space, it's a partnership or a merger with an existing player. So this would be a brand new entrant, which would be distinct from really the grocery space. So Matt, from your perspective, I guess the first question is, will Amazon actually go through with this?
This is something that Amazon has been kind of kicking around the idea for a really long time. Like it's nothing new. I mean, I'm pretty sure they've been hiring people throughout the past couple of months or probably years in that space trying to like get their own PBM. And I mean, last week you saw the news report saying they're going to have a definitive decision if they're going to actually get into that by, I think, Thanksgiving it was. It's interesting that Amazon is doing it in this space because, like you said, the PBM space there's a lot more regulation there, and that's kind of something that Amazon hasn't really gotten into. Like Whole Foods, it's a really difficult thing to get into to make money in, but I mean, there's no really regulation there. You can just kind of, sell some groceries, get the distribution right and sell some groceries. But to get into like the legal aspect of CVS, it's not going to be easy. But if anyone can do it, probably Amazon.
Yeah, well, I mean, they don't really have to worry about money, do they?
Mm-hmm.
And they can hire these people. So as recently as April, they hired a guy from Premera Blue Cross, which is a division of Anthem. And he was tasked with the job of starting an internal PBM for Amazon itself. So essentially managing the pharmacy benefits. Amazon self-insures, which means that they don't use an outside insurer like Blue Cross Blue Shield or United Healthcare. They actually insure their employees themselves. They have a wide enough employee base where they can diversify the risks, and Amazon will just pay the money. So they hire a guy to actually manage those pharmacy benefits. So what happened is that he is now potentially being transitioned into actually expanding that PBM and expanding that knowledge base and repurposing it so that they can actually provide the PBM to outside customers, not just Amazon employees. The second question, I guess, is what are the impacts to the existing players?
I mean, I guess you could say the market is taking it pretty seriously. I mean, that report on Friday, I think the last 2 hours of the day, it dropped around 4 or 5% just on that what I was saying before, they're going to decide by Thanksgiving if they're going to do it or not.
This is CVS.
Just on that. Yeah, this is CVS. And Express Scripts was down, I think, 3 maybe. I think a little less. And then today you kind of have a continuation of that with CVS down 4, Express Scripts down 5. Like you said, those are the 2 major players there that are probably going to directly probably not have much of an impact, but over time, it's going to just be a drain to the top line at least.
Yeah, it'll be tough for Amazon to really make significant inroads immediately because these contracts have time to wear off.
But like you said with Kroger, that's the same type of thing with Kroger, where I don't think Whole Foods initially is going to be that big of a drain. I mean, they cut some prices, but I don't think that's going to take away too much from Kroger. But over time, as Amazon builds that out, as they invest more in it, as you get, direct distribution of the groceries like that, that'll just cut into Kroger. And that's like the fear that you've seen in Kroger, from 30% down to $20 or $30 down to $20, which is, just in the dumpster.
And this is definitely a case where the stock price would lead the fundamentals significantly. Mm-hmm. So you might see the earnings not really drop for a while, but the price just has a continual lid on it because of this constant threat that Amazon's going to take market share. And I think probably the biggest catalyst near term is actually the Anthem contract. I think you got this Anthem contract that's hanging out there because what happened was Express Scripts was overcharging Anthem, which is the leader of the Blue Cross Blue Shield insurance provider, which is the retail name. So you have this division, and I think that the perception has been that CVS is in prime position to go take that contract from Anthem. The concern now is that Amazon might see this as the prime opportunity to get scale, and because scale is so important in the PBM space. If Amazon can win that contract, all of a sudden they're not just a player trying to get into the space, they are in that space and they have immediate scale. Mm-hmm. What do you think?
So you have that, and when you get to Thanksgiving, and if assuming Amazon says they're going to get into it, which I think they will personally, you're going to see another 5% drop, like you saw with Kroger when when Amazon said they're going to cut the prices at Whole Foods, you saw Kroger drop 10% just on that news again.
Yeah. What do you think of the? So there's been a lot of speculation that Amazon might not try to do it alone. They might try to partner with an existing player, and the one in prime position right now is Express Scripts because they are the online provider. They don't have a retail presence like CVS does. Do you think there's anything to Amazon wanting to partner or buy Express Scripts, or do you think they go it alone?
I don't think they want to shell out that much money. CVS is out the table because they're way too big. Their market cap's, I think, $80 billion. Express Scripts is, I can't remember, around 40, I want to say.
They're both down today, whatever it is.
But I think that's just too much money for Amazon to shell out on something like this. They can buy a smaller player for like a few $1 billion if they wanted to, and just kind of get the legal stuff out of the way, with everything they have to go through, and just kind of expand it from there. I think that's probably the most likely scenario, personally. But or a partnership is also really possible too. But I think CVS is in the most trouble though.
Yeah, I would argue Express Scripts is, just because at least CVS might have a little bit of a buffer with their retail.
Mm-hmm. I'm not bullish on that, but that's
yeah. But as far as online to online, Express Scripts, I think, in my opinion, would be the biggest competitor. But there's definitely, they would definitely be hit, both of them. I think that one other thing that Amazon could do is go to someone like Anthem and say, we will build your internal PBM just like we did at Amazon. And they can say, basically, Anthem, we're partnering with you, because United Healthcare now has its own internal PBM. Anthem, which is the second largest health insurer, mm-hmm. does not. They have been using Express Scripts. Amazon could go to them and say, basically, Anthem, create your PBM and we will administer it because we have best-in-class distribution to retail customers.
That'd be interesting.
And I think that could be something where Anthem's happy with it because they make better returns. Amazon, they don't really have to go through the regulatory process. Anthem has to go through that. Anthem is used to dealing with the regulatory authorities. And then over time, you see Amazon say, hey, this is actually a nice business. We can do this.
I think if you're Anthem too, you're probably looking at United Health, who did that PBM themselves by buying Optum. And like, if you look at United Health's share price, it's like just killed it like over an extended period of time, largely because of that. United
Healthcare has been a machine at just being able to take out the middleman in their process and just collect more money for themselves.
So maybe that's a good blueprint for Anthem trying to do that with Amazon. Who knows?
Yeah. Well, I guess we have about a month and a half now. The clock's ticking, and then we'll have an answer. And we'll make sure that we keep you up to date and keep you informed when we do get that answer. So my guess is it would be after Amazon reports earnings, and which would put it somewhere in the beginning of November, end of October timeframe. So stay tuned. There will be more news to come. It's not a question of if, there will be. So that's it for us. Thank you.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.